Reginald, good afternoon. I see today the market is opening slightly stronger. Any particular factors that are driving that, that market higher, considering tomorrow we've got the central bank meeting?
I don't think really the effect is from the Monetary Policy Committee meeting, but we are getting into February, which is an earnings season, the climax of the earnings seasons for 2010, where companies are now announcing their full year results. So most people are now taking their positions before the rally comes in. Some prices are already factoring expected profits.
So where is that money being positioned against? I know, for instance, that you have had difficulties with the drought in parts of northern Kenya. Any of that filtering through to market prices?
No, not yet, actually. Right now, the prices are really more focused on 2010 performance. We saw first quarter, second quarter, third quarter results of especially the banking sector and some industrial, but generally 2010 was a good year for most companies. So the results that are going to be announced in February are 2010 results. So people are factoring in the anticipated full year results. The drought effect, you'll find it start playing maybe soon after February into March. You start seeing the impact on counters like Kenyan, which has already started falling. The agricultural stocks, your Mumias, your Sassinis, and your Kakuzis.
So now, where are you seeing that money being positioned? Where are you seeing the strongest bids?
Currently, most of the money is going to the banking sector. They are the first ones that were going to announce results. Last year, they had a fabulous year. Banking assets increased greatly. And most of that money is getting into what we call your growth stocks in the banking sector, which is your cooperative bank, your National Bank of Kenya, your Equity Bank, your Diamond Trust Bank. So you find most money is moving towards that area and towards that side. And some money is also moving into Kenya Power and Lighting. Who just their rights got uploaded, but the price is now maintained, it's picking up again.
Is there any particular reason for Kenya Power and Lighting to be up? I mean, we do know that they had that share sale earlier last week, and today we're seeing that stock up 2.3%. Any specific reason why investors would be interested in Kenya Power and Lighting?
In essence, they really don't have any competition. They're the only company that distributes electricity in Kenya. So they handle the pricing. And with the drought coming, we all know what normally happens with KPLC is they start getting power from the independent power producers who normally use thermal, as in diesel. And what they just do is pass the whole cost with a bit of markup on it to the consumer. So when there's actually a drought, KPLC flourishes. So that's what people may be looking at and moving into the counter.
Yeah. Now, tomorrow we've got the central bank meeting to discuss its monetary policy. We saw yesterday in Nigeria, the central bank there raising rates by 25 basis points. Any likelihood that we could see a similar move by the Kenyan bank?
Not really. Market sentiment is that the rate will remain steady. They won't hike the rate up or take it lower. There is sufficient liquidity in the market currently. But maybe fear of inflation, which has started creeping up slowly but surely since towards the end of last year, beginning this year, might entice them to hike the rate. And if they do that, then they lose their battle again on trying to keep interest rates down. If you've noticed recently, the 91-day treasury bills on 82-day indicative rates have been steadily going up as people foresee huge government borrowing in the next coming fiscal year because of the drought. So I think they'll keep it steady for this meeting, monitor the situation further, but a rate hike is not avoidable this year.
It's not avoidable. In other words, you're expecting that at some point we are likely to see the central bank coming in and hiking those rates. When do you think they will probably come in and have to take a look and worry about what other emerging markets are worrying about, increasing inflation? Increasing inflation, exactly.
I think towards the end of this quarter, as we enter into the second quarter, towards the end of the government fiscal year, we expect the budget that will be announced this year will be larger than last year because of the constitution implementation and all these other factors and the drought. And you find most investors are now bidding a bit aggressive with an anticipation of a rate hike in the year. So towards the end of this quarter, when they have their meeting, I think their March meeting, we should see at least a slight increase in the rate.
Let's talk about some of the stocks that you like yourself. Now, you mentioned Diamond Bank, Cooperative, as well as Equity, and I'm seeing all those are banks. Your money it looks like it's particularly focused on the banks. Is there any particular reason why? Because one of the reasons that we've heard coming out of Kenya in the past few weeks has been the fact that Kenyan companies are best placed to profit from the expected secession of South Sudan.
Yes, that is true, but I think Southern Sudan is still going to be a process. I don't think we'll see major profits coming in to any company this year. Maybe apart from the companies that are already in Southern Sudan, like Equity, KCB, and I think East Africa Breweries to an extent. So Southern Sudan really is a factor that will start playing maybe next year. Mostly this year we'll see companies trying to expand into Southern Sudan, which is the cost into their P&L figures. But the reason why I'm saying banking sector is because the economy is good. There's a feel-good feeling in the economy, and most companies will want to expand to Southern Sudan. And how are they going to do that? If they're not listed, they have to go to their banks, try to get syndicated loans and everything. And this all works out for the banking sector. And I'm also expecting a good forex income in the banking sector. And on the bond trading side, I'm sure banks will do very well this year, especially with this expectation of raising rates in the year.
An interesting phenomenon this year has also been the presence of foreign investors. They've been heavily present in Kenya. We've also seen them coming heavily into the Nigerian market as well as here in the South African market. What are they looking at in the Kenyan market? We do know, of course, that they like Safaricom, but aside from that, what else are they looking at?
Yeah, and I know most of them like Safaricom, but I don't think most of them are smiling currently, considering Safaricom plummeted recently. But obviously, they're looking at good returns. The Nairobi Stock Exchange had its best year ever last year, but it is still underneath where the height it reached in 2007. So most investors are factoring in that the economy is recovering, there is political stability, and they expect the economy to grow further this year. And as it grows, the stock exchange should move along with the economy. If the rates do go up, which will also be good for them, we might actually even see more foreign investors coming in now looking for higher yields. But generally, there is a risk appetite in the global economy, as most economies look like they're stabilizing.
Yeah, but now, of course, with Kenya's economy expected to grow, I think in excess of 5%, surely we should also see some money being positioned into those companies likely to benefit from accelerating economic growth. Give us a breakdown of where perhaps money would be coming in, in the expected, if as expected, the Kenyan economy continues to grow.
Okay. Basically, I think the main drivers of economic growth this year, if the drought doesn't stay that long, agriculture will remain a huge driver. You have your financial services that has been growing exponentially over the years. So that means we're seeing money in the banking sector, especially banks that are a bit small in size. Maybe you not see money going to the Barclays or the Standards, but you might see more money in the equity banks, the cooperative banks, the national banks, the Diamond Trust banks. And another sector to look out for is construction. As the government continues to push for infrastructure, the demand for cement in the country is so high that players can't even supply it. So we expect prices to go up. And there is a counter that I believe, okay, it doesn't have much liquidity, that's why it's overlooked by foreign investors, but maybe a good one for local investors, which is Unga Group, because basically they're the only listed food processing company, one of the largest in the country, and I really wonder why people don't even move into that counter.